Hey there, YouTube world. Brian Parker of the Brian Parker Group. Welcome back to Know Before You Owe. Thank you for checking in on this episode. Today, we're going to spend a few minutes talking about asset-based lending. So maybe you're in a situation where you have a fixed income, pension, Social Security, disability, something like that, but maybe have some good assets, whether they be retirement-based, investment-based, and so forth. Or you may just be, normal person, 55 years old, but you're self-employed, write everything off, don't show a lot of stuff in your tax returns, but you've got good assets. So how can you potentially leverage assets to help you buy a home? So we're going to look at it in two different buckets, okay? One is the retirement bucket. You're at the age of 59 and a half or older. You have a good amount of asset-based retirement, so 401k, or you funded IRA or whatnot with that. And then for us as a lender, they're within that kind of program dynamics. We've got two different ways we look at it. We go through one agency, Fannie Mae or Freddie Mac, and there they have a specific calculation we can use that will determine how much income we can give you based on the assets you have and your age. And with that, you may not even need to be taking that income out of that asset. And in utilizing that program dynamic with the agency, it's a very easy formula, very easy calculation. And we set it up that way. It gives us income that you're qualifying with, but you never take it out of your assets. Okay. Now, on the other side, with one of the other agencies, their calculation is a little bit different and not quite as lenient as one for the other. But they will also let you do something a little bit different to where you may not be taking income from it yet, but I'm working with you as my buyer or my borrower, and I need you to be making $5,000 a month out of those assets, or $10,000 a month out of those assets. All you have to do is you set up the distribution with your financial manager. You get one distribution in your bank account before we can issue final approval on your loan, and that's income I have to help you qualify for your loan. Whether or not you keep that distribution coming in after you buy your home, that is up to you. But if we need to get more income by setting up the distribution versus doing a standard calculation where we don't take the income, might be a better way to do it in your situation. Now, if you're not retirement age where we can use those assets at 59 and a half, there are some non-QM asset-based loans we look at. And when we say non-QM, that's a non-qualified mortgage, which means it's not your standard agency, government-sponsored enterprise rules and written guideline mortgage, okay? But you can do those programs with being 55 years old, okay? And their calculations are actually pretty friendly as well. I won't go into a whole lot of details, obviously, for client confidentiality, but I got a good buddy of mine. He's 55, not retired, but wasn't showing a whole lot of income coming in. We were helping him buy a new primary home, relocating from one state to another. And based on his retirement-based assets, then his other investment accounts, and the formula calculation we used with the investor we worked with on that, I was able to give him credit for almost $15,000 per month income that he wasn't taking a dime off of whatsoever. So asset-based lending is a thing, and it's a great way if you've done a fabulous job in building your finances over the life of your work history, your career, investments, or whatever that might be. So if you, your friends, or family need help in knowing how do you use your assets to buy your home loan, uh, feel free to reach out to me. Talk to your local mortgage professional, but I am in all 50 states. Brian Parker with the Brian Parker Group. As always, God bless you. Hope you have a great day. We'll see you soon.